Hello traders, this is another edition of StrayDog's weekly videos, and in this video I will go through the 240-minute and daily chart of these indices: DAX, S&P, Nasdaq and Russell. Also, one bigger subject of this video is going to be Friday's price action, especially on the SPX. And was it a manipulation or short covering? Because I'm sure that you can see, especially with the perma bears, that they are calling this a manipulation. And I will do a myth busting of this move, because this, what happened on Friday, is something that is very repetitive and that will happen again and again and again. Now let's go first to the 240-minute charts. I'm going to start with the DAX. As you know, we had an NFP report on Friday. DAX, after a lot of chop, finally touched the larger time frame support and later had a good size bounce from it following the action on US market. Just to emphasize this thing on DAX, this movement on DAX, so these symbols are from DAX recap videos. Usually you will not get this kind of price action. It was a special day, it was an NFP day, and market just chopped plenty of hours into the NFP announcement, which was here, this candle. Either on either days that are not NFP days, on some other days, you will not have this kind of price action. Probably you will have, if the open was here like today, probably they would make maybe this same move or to the main support early in the session. They were waiting on Friday for this to happen, but on some other days we would get more fluid price action than this. Now back to the 240-minute charts. So market, not only DAX, but as you can see later, and you will see later, that all indices made this kind of bounce from a larger time frame support. So this here is a larger time frame support. It was a resistance here, support here, and support also here. Now let's go back to the S&P, and S&P also had a test of the larger time frame support and made a spring below. Now this kind of movement, false breakouts and false breakdowns, are something that I have said many times on Twitter, that you really need to understand them, to find them and to trade them, because they are very often and you can find them on every liquid instrument. Here is Nasdaq. Nasdaq also have a spring, and here is Russell that had an upthrust first above this. As you can see, this is a resistance. It made an upthrust first, then lower high, then here a spring. I have shown this picture before, but I will show it to you again. This is from the book Trades About to Happen by David H. Weiss. And he said you can make a living by trading springs and upthrusts, and that is true. But as he said, your eyes will be opened to an actual signal that works in all time periods, after a while, after some screen time. And about upthrust and springs, about generally about real breaks and false breaks. For a real break, you will have, for a real breakout, you will have a context that is good for it, like we had on DAX on January the 18th, and here on my videos you can find easily that day. This is it, breakout day from January the 18th, and this day is the example of the breakout of the range that was tested multiple times, and how market was prone to make a breakout that day, and they did. About false breakdowns or springs, so this here, this is a spring, false breakdown. I will do my explanation of it, and you can also watch this video. Don't mind this how to destroy market maker. It's a clickbait, obviously a clickbait headline of the video, but this guy is really good at explaining the false breakdown. So this is a good video for explaining the false breakdown. Now back to the chart. So that was the situation on Friday. Markets were all of them are hitting, like DAX were hitting the good support on the larger time frames, and US indices were making a spring. Now let's go to the daily chart, starting with the DAX again. And you can see the DAX basically made a bullish hammer on the larger time frame support. S&P has the same kind of candle that is closed very near the daily 200. Nasdaq has the bullish hammer also, and Russell has it also. Now, I don't pay much attention on just this single candle, since after all this price is an advertising mechanism, but all of those looks like a bullish hammer. Now, the question is how these candles were made, what really happened on Friday. And to answer that question, we must go back to the smaller time frames. And then it would really not matter, are you going to use, the CFD chart, or you're going to use a futures chart, because context and what happened is the same. So what happened really? Before the New York Stock Exchange open. Now this is chart, I don't really use a 3-minute chart, but it was good for me to make this thumbnail picture for the video to fit it all. It is the only reason why it is on a 3-minute. And what was the context before the New York Stock Exchange opened? Now, because I'm living in Europe and using Central European time, it is the German time. It opens at 3:30 p.m. and this line is New York Stock Exchange open. Now, all of this was overnight action, like pre-market action. And before the open, S&P was already down like almost a percent, like 0.8%, I think. And you had a few days, red days in a row, if you are going to look at the daily chart. You see, few days in a row, and then it would be easy, to imagine a potential scenario on, like a big down day. They are closing here on the 200 now. If you look like this, wow, we are just a really big down day. Markets down in the overnight session, hitting larger time frame support, and for it to break that larger time frame support, it would need sustained momentum, strong momentum, large sellers, to make a breakdown. And just a lack of weakness here at the open is enough for buyers to react. And what did they do? We got the spring below overnight low. As said in the DAX recap video, it is the most common bullish scenario and setup that you will ever get. They tested overnight low later again with no result whatsoever. So hitting a larger time frame support, you could say, looking like this, hey, I could do a fib retracement to here, and now you observe the 38.2 fib retracement is back down. You have room to go. So this is just a shallow pullback, and now it would be really, tempting for you to make a short attempt here. And that is exactly what all these people were doing here. And market was basically almost 100% net short, because almost all of the pre-market action except this here was below the SPX cash index close. So this was the close, and all of those people were below, basically short in the hole. And when you see that this is happening right about there in time, you could additionally help yourself by using the free questions from Jim Dalton. and asking them and answering loud, what is the market doing? Okay, market is going down. What is the market trying to do? They're trying to go below overnight low. They're trying to make a breakdown. That is the answer. And how good of a job is it doing getting there? A very poor job. Very poor job. And the lack of weakness is enough for the buyers to react. And buyers were just defending this line for them and nothing else. And at the end, this rally, here, especially this at the end, because this is just like a last half an hour of the session. It was not like some PPT, plunge protection team, people like to say that, or any large buyer, because large buyers don't buy into the close, especially not on Friday. They just buy entire day. They will start to buy of the open, not to do this. And this was classic short covering rally. Why is that? Because sellers were put themselves into the corner. They were short in the hole and nobody was there to push below. Buyers just had to hold right there the overnight low and nothing else. Near the end of the session, it was crystal clear the sellers are not going to be paid for their effort, and therefore they were forced to close. As always, these kind of late rallies are questionable. Are they going to hold or not? But again, this was on Friday. Market has entire weekend to chew on that move. That move is more questionable when it is in the middle of the week, because it is not new money buying. This is these sellers that are not getting any result for them. They are selling. They want a breakdown. They want a trend down day. They want a continuation move here to go below 200, and they didn't get that. They don't want to take a weekend risk. They're forcing to close. And although, as said, it was a very small pullback so far from this main resistance on the S&P, market was short-term oversold and hitting larger time frame support. And don't be surprised by this. Market in recent years become very, very short-term oriented. In majority of traders are day traders and algos that are programmed to day trade or to scalp. And that is why we get this kind of moves, and we can exploit that kind of short-termism by picking only good location for entries, and this was here very good location for long, because this is your only edge here, good location. And day traders, they don't make trends, they don't move markets, but they are responsible for these smaller moves that come for very visual references. So Friday was no intervention, no manipulation. It was just a short covering rally. And I am not saying that there are no manipulation. Of course that there is a manipulation, especially on smaller stocks and on some other instruments. But here, this was enough for buyers just to hold the ground, and sellers were forced to close. And there are plenty of videos on my channel for DAX to see how we the DAX traders can exploit the zones and how the market is reacting good on those zones. And you can also see on my site here some extra material on examples, how you can use zones in your trading on blog, and some other content is here. So that was it about this Friday kind of price action. And back to the larger time frame. So really here nothing is decisive on any of these instruments. This candle alone looking bullish, but now bulls have to again push the price above the 200, and then they could, as said before, they could just make here another range for many days and push this market slowly higher. That is one scenario. The other scenario is rolling down, and you could not know absolutely in advance what kind of scenario is going to be played. That is it for me for this edition of Stray Dogs weekly videos. I wish you good weekend and good trading.